London AIM-listed Zinnwald Lithium is in the sweet spot for the European metals industry, feeding into this relatively new market of battery metals. I say relatively new, it's come a long way in a relatively short space of time. Zinnwald is targeting the development of its project located in Germany. The strategy is to supply high-value lithium products to Europe's rapidly growing electric vehicle and energy storage markets. Lithium, of course, is on the EU's list of critical metals that it plans to support locally. All looks good for Zinnwald. The chief executive, Anton du Plessis, has joined us now. It's been a while since we've spoken. A lot of water has passed under the bridge of battery metals since then. I want to get on to the wider picture in just a minute. Just bring us up to date where you are, because I know those that know the stock know that you've had a PEA, a preliminary economic assessment, come to light. What's it tell us?
Great, and thanks for having me, Jeremy. Just to sort of give you some background on that. So we've had full control of the asset, 100% of the asset, for just a little over a year now. And once we took full control of the asset, we took a very deep dive into the whole sort of technical side of it and matched that to what off-takers and users of lithium were telling us about what the market wants in Europe in terms of product. And two things became very clear to us from that. One, we needed to focus on a product that people were really clamoring for, which is lithium hydroxide, and I can get into the specifics of what lithium hydroxide is used for in a moment if you like. But the other thing was we needed to have more scale. And so those two things were the kind of the pillars of what we sought to do with our new technical plan. That's been summarized in the PEA. We put that out last week, and that really shows, quite in our minds, a very compelling project. So we'll look to have a project that produces 12,000 tons per annum of battery-grade lithium hydroxide. It's a very long-life operation, so given the resource we have there, that could support production over 35 years. There's upside to that as well. I mean, we've picked up a number of exploration licenses in the area, and we've started an exploration program on one of those just a couple of weeks ago, and that could provide further feed to the project if it proves up the way we hope it will.
Is the sort of lithium you're producing, the one you just described, is that the main one that battery makers like to have? I mean, are you up against stiff competition in this sector, or can you diversify into other sorts of lithium?
So there are two primary lithium compounds that are used by the battery sector. One is lithium carbonate, the other is lithium hydroxide. And typically one makes lithium hydroxide through a carbonate source. So it's not too different. The real difference between them is lithium hydroxide is mainly used in nickel-based battery chemistries, whereas lithium carbonate is used in the iron-based battery chemistries, and they have different kind of cost and other physical features. The benefit typically of the nickel-based chemistries is they're higher energy density and they have better cold weather performance, and therefore at this point they're favored by European car makers, given it's a colder climate than some other places, and they're targeting longer range and higher performance vehicles. So that's the reason for that. And I think if you look across the kind of universe of European projects, most of them are targeted on lithium hydroxide, probably for that reason.
Yeah. You say on your website, opportunity to become a key low-cost supplier to Europe's fast-growing battery market. Fast-growing is the operative word here. And demand and supply is changing all the time. Obviously, there's massive demand and a lot of pent-up demand. I guess lithium is not made in the quantities it needs to be made in yet, is it really? No. That's the issue about the market at the moment. First of all, how far away from production are you? Do you have any sort of glide path that you're aiming towards?
Yes, so the broad, and we've summarized this in our PEA, the broad objective is to try and aim for, so our first sort of key milestone is to do a complete bankable feasibility study, which we hope to have out by the end of next year. And that's a core document in terms of something that kind of defines the project in much greater detail that one can finance off the back of. So that's the first sort of milestone. But the longer term strategy is to try and be in production by sort of late 2026. Obviously there are factors that will influence that. Some of those are in our control, some are not. Permitting, financing, these are sorts of things that will have to get built into that time frame. But the idea is to be production in that kind of time frame, and that we think sort of coincides very much with when we see sort of a real growth in demand in Europe. If you look at what commentators are saying, they're looking for significant growth ahead of 2030, and supply not really being able to sort of keep up with that.
Yeah. Do you see the market changing much more? I mean, as I said, there's a lot of demand that's coming down the pipe, not enough supply coming through. Do you see that changing? I mean, as the price of lithium goes up, quite often it does bring on new mines into operation because obviously people see an opportunity to make profit. Is there the resource around the world that's been proved up to give us to support this sort of demand that we're now expecting?
In a lot of ways, lithium is not scarce. It can be found. The difficulty is finding it in sufficiently economic concentrations. That's one thing. And then the other side of it is actually being able to bring it into production.
Yeah.
And that's requires a number of things, but typically takes a long time. So from discovery to production is a 10 to 15 year project typically for any kind of resource. So price will incent new supply, but it takes time for that to flow through, and that's kind of what we're experiencing at the moment. I don't think a lot of people anticipated that electric vehicles, which is obviously a big part of the demand, would grow as quickly as they have in terms of demands. I mean, already in Europe, many countries in Europe, which are big car markets, we're seeing 10, 12, 15% of new cars being electric. The US, which is a very big market, that's probably still sub 10, but it's growing very, very quickly. So, overall demand for lithium is expected to, reach sort of a CAGR of, 25 to 30% per year.
So, Zinnwald, you're already on the path. As you explained, your economics are there, and 2026 seems actually it's quite close, really, isn't it? It doesn't give you much time to get everything in order to get to that point. Just wanted to talk about this in the context of the share price as well, if I can, because where you are, I mean, quite often this is the difficulty, isn't it? Between now and 2026, what is this share price banking in? Does it project much of the future? I'm asking this question because there is a lot, presumably, of expenditure that needs to be undertaken before you get to that first pour of lithium, for whatever excuse there is, or mining, whatever it is. What happens between now and then?
Well, as I say, our next big step is the bankable. That should be a far more detailed document that addresses all manner of aspects of the project, and that will also be a key document in terms of kind of how we build the eventual financing of this project. So, like most projects, it'll be a mix of debt and equity, and the level of debt it can support will depend on kind of really the nuts and bolts of that bankable feasibility study, how robust it is, and so on. But we would think that typically mining projects get sort of around 60% funded by debt. The balance has to come from a combination of equity and other sort of quasi-equity sources. So that could cover a range of things, and we as the management team are constantly looking through all of those. But the final strategy on that will coalesce around the completion of the bankable.
And going back to the share price, what is it, 11.3 at the moment in the London markets? I think market cap about 40 million. What is this representing of the final sort of figures you're looking at in terms of potential for the mine?
Sure. So market cap, I think just over £30 million, so just over $40 million. The PEA indicated a post-tax NPV for the project based on a number of assumptions of around $1 billion. So you've got, $40 million current value playing a theoretical value of $1 billion. I would argue that that's not fully baking in, even the option value of this asset, and we would hope to see that, as things develop, the price starts to reflect that.
Do you get any support from governments in Europe? I talked a little bit about the top about how it is a desperately needed battery metal for Europe. The list of critical materials, according to the EU. Is there government help in all this?
It's on the mining side. It's actually been relatively light across Europe to this point, and that's certainly something we would, as we engage with various people within the EU and also within kind of regional and federal government locally, we would see to have addressed, because we think there is a role. I mean, if you look at what's been happening in the US in terms of government support with the Inflation Reduction Act that Biden's pushed through. There's actually a lot of support for raw material supplies built into that. And we think the EU and Europe is lagging a bit behind that in terms of really putting its weight behind this. But it is coming. You have seen them put quite a lot of money into the sort of battery supply side of things. Mm-hmm. That stimulated a significant planned capacity increase from the battery side. That will then require far more raw materials, and therefore the support for the raw materials should follow from that.
Okay, well, let's just round it up now with the final question about where now, what you're doing. You've explained a little bit about where the company's going in terms of direction and so forth. What do you think are the key milestones, if you like, to watch out for from an investment point of view?
Well, I mean, the work we're currently doing is we've started an infill drill program on our core Zinnwald deposit. So that's meant to help us with a more detailed mine planning for that deposit. We also started a drill program at one of our exploration licenses, Falkenhayn. Now that's quite interesting because we've done a thorough review of all the historic data on that property, and there's a lot of that because it was extensively drilled, before the 90s, and we think it has very good prospectivity. So we hope to prove that up, which again could show some upside for potentially quite good upside for the project. So those are two areas. We're also doing a fair amount of work on sort of firming up aspects of our flow sheet and so on, in areas where we think there's scope to really increase the efficiency and take cost out of the business. So ore sorting would be one of those areas, to more efficiently separate waste from ore. We think that'll have good application for us. Other areas are, looking at the sort of complete electrification of our sort of mining fleet and mining plan. And we hope to have some progress on that. We've already incorporated some of that in our PEA, but we think, doing that from scratch for a new underground mine has potentially big benefits.
So you see yourself, using renewables more and more? Do you?
Well, I mean, renewables certainly, but this is more the flow of materials within the mine, and using an electric fleet rather than a diesel fleet, using sort of underground conveyors, rail, etc. Just the whole nature of the way we've looked at and redesigned the mine to change the material flow to being downhill, effectively has a significant impact in terms of energy use, and being more efficient on energy use it's obviously a key thing right now, but just generally it goes to your overall costs of operation, and we think we think that'll be a big area and certainly one to look for some developments out of us on.
Good. Well, we'll look forward to hearing more about that as when it all takes place. But Anton, in the meantime, thanks indeed for joining us. That's Anton du Plessis. He's Chief Executive of Zinnwald Lithium.